Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
I'm Tim Stenovic along with Emily Grafeo. Let's take a look at some stocks on the move today. Joining us now is Bloomberg News Deputy Team Leader for U.S. Equities, Jess Menton. She's here with our stock movers. Hey, Jess, what's on your radar today?
So I wanted to do something a little bit under the hood of the surface, because the last couple of days things had been waffling around, even though the S&P 500 eked out a gain yesterday, and now it's trying to, hold on to those gains into the closing bell. So I looked more closely at what happens with dividend paying stocks, because they are outperforming the market. If you look at kind of the top three sectors here, whether it's utility, staples, also real estate, typically those ones that do well in lower volatility environments, obviously the VIX below 20, and then known for those steady payouts when it comes to dividends. And so unfortunately, they don't have a big weighting in the index. So the top three weightings in the S&P 500, not surprisingly, you'd have technology, consumer discretionary, and then you also have financials. So when you have weightings like this that are below 10%, far below that, all three of those indexes when it comes to those sectors rather, are actually below 5% weighting in the index. So even though they're doing well and they're outperforming, it's really not going to move the needle that much. So American Waterworks is one of the companies I was keeping a close eye on, and that's AWK is the ticker symbol on that, up 4%. So on pace for its best day since March 7th. And then another one would be Procter Gamble. So PG, the ticker symbol on that, up more than 2%. And then Coca-Cola, usually have to, one of Warren Buffett's favorites, of course, KO, the ticker symbol, up more than 3%. So this really comes on the back of the manufacturing and the retail sales data that we had earlier this morning. And then also kind of boosting the bets that we potentially could see maybe 2 rate cuts if you're looking at the swaps markets right now. So you're seeing those dividend payers that had been underperforming the broader market this year, particularly since the low back in April, starting to pick up some steam here.
Are these types of stocks typically seen as havens, though?
They are. What's interesting, though, is utilities can... It's almost like because of what happened with the AI play last year, you kind of have to break it up, because if you're a data center business, you're viewed very differently, like a Vistra, something like that. That would one of the best performers in the S&P 500 last year. American Waterworks, that's a water utility type company. So that's more of like when you think of haven type names. I wouldn't say necessarily it's like a safe haven type trade. It's just you had so much of a big bounce here. The S&P 500 is up close to 19% since that April 8th closing low. And if you looked at the Dividend Aristocrats Index in the S&P 500. So those are companies that have increased payouts for at least 25 straight years. That's actually up just 10% in that span. So you're seeing kind of these more unloved corners starting to pick up steam. And that's some calls that actually trading desks like Citi as well as JP Morgan, they were thinking that small caps as well as maybe hardware stocks and some of the durables might pick up steam just in the short term. It wasn't like a longer term play that money managers would use, but it was one of those spots that they thought that they could see a little bit of outperformance here in the next couple of weeks.
In the longer term, it seemed like consumer staples companies have been a good place to hide out from the economic turmoil, we could call it. But Walmart is down a ton today.
What's interesting about Walmart, too, because that was trading like a growth stock coming into this year. So if you kind of think back to what happened when they reported their results back in February for the last 3 months of 2024, that stock had been up over 70%. The only 2 Mag 7 stocks that outperformed it was Tesla and Nvidia in that span. Then, of course, it trimmed its guidance for this year. And then you come in and then they report this morning. So there were some bright spots for the first quarter, but that's more backward looking. But you do have its chief financial officer suggesting that those price hikes could come potentially as soon as later this month. So some of it, when you think about Staples and Walmart, how much of it is, concerns about potential economy versus a stock that had been really outperforming not just its peers, but some of these growth stocks. So it wasn't necessarily trading like a staple stock or a value stock for a while. It was trading more like a growth stock. So that's something that when I'm talking to a lot of money managers, they're still talking about. And it just became kind of an outsized position in some portfolios earlier this year, and that's when they started trimming it.
It's pairing losses. I said it was down a ton. It was down as much as 5%, but it's actually now down only 0.8%.
Yeah, and it's tricky because not all of the retailers are housed in the staples sector. They're also in consumer discretionary, and that's one of the laggards today. But also you have to point out that Tesla as well as Amazon are both in that sector too, so weighing on discretionary.
Okay, before we let you go, Deere, John Deere, the green tractor. You're looking at that today.
Yes, DE is the ticker symbol, up about 4%, actually trading at record. So it's above $500. It actually had fallen as much, close to 20% back in August. That's during the carry trade unwind here. But that stock is jumping even despite a guidance cut because management lowered its net income forecast by 2% for this year. But that was actually nearly 1% above consensus estimates on Wall Street. So even though you have Deere being a net exporter, it still imports products from Mexico and Europe. So people were watching that because it's so closely tied to what happens with what farmers are doing, as well as being the world's largest machinery maker. So it's a big tell on the economy. So the fact that it wasn't as bad as feared with the ties to tariffs, that's why you're seeing that stock trading at records. So that would bode well for the economy if you see a stock like that doing well.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.